Okay, we're looking at the Bloomberg Commodity Index, BCOM, if you're looking for the ticker. And we take this low and this high that defines the swing, and half the distance would be 99.72, which is the 50% retracement. So the fact that you bounced off of this retracement and then subsequent to that you closed above this one by one down from high, that sets up a rally to follow. So it's sort of a time and price setup. You have these cycles, 78-week cycle, 52-week cycle, 64-week cycle. They called the low at the same time that the Bloomberg Commodity Index was bouncing off this support in price. So time and price, and then you get the close above the Gann line that confirms that you're going higher. So that's what you want to see. And obviously, if you close below, or if you close above this Fibonacci level at 109.36, then yeah, you're on your way. But it looks good so far. I mean, I actually called attention to this back here for my clients because I said there's a good chance it's going to bounce because you have these cycles calling for a low. So a strong sell-off into the cycles oftentimes sets up a reversal in trend, and if you want to confirm it, you wait for a close above the Gann line. So that's where, time and price come together, setting up a big move up for commodities around the same time that market shills are telling you not to worry, nothing to see here, no threat of inflation, you can go about your business, everything's rosy, soft landing or no landing, and the economy will just keep going all the way into the election. Yeah, right. Okay, if you believe that, I have some swampland in Florida to sell you. But we also know that economists tend to be wrong more than they're right. So that's sort of like confirmation that this setup is great, because a lot of economists are telling you there will be no recession. So they're saying that as you break out, they're telling you there's no inflation when commodities are starting a huge move up. And real estate has not been as weak as they predicted. So guess what? Fed's going to have to keep raising rates, and if so, there's got to be a straw that breaks the camel's back. And when they raise rates this week, I think it may be the straw that breaks the camel's back. So let's see what happens. This will be kind of exciting to see what happens after the rate hike this Wednesday. I believe that's the 11th rate hike. Which one's the lucky one? Is it 10, 11, 12, 13? I mean, everyone thinks there's going to be an end to the rate hikes, but if this chart is correct, how can the Fed stop raising rates if commodities are going to go to new highs? You tell me. Does that make any sense to you? You can either believe your lying eyes, or you can believe the economists and the talking heads on CNBC and Bloomberg. I prefer to believe the charts. That's just me. The charts are telling you bounced off 50% mark, you broke out above the one by one line, and you're starting a huge move up for commodities. A big part of that would be oil, but a range of commodities. So this is going to be fascinating. Hold on, because this roller coaster is about to take a dip.